So the US dollar is under tremendous pressure. Now, before the trade war happened, what did we hear from Bessent? He said the US had a strong dollar policy, which was exactly what was needed. With a strong dollar, the US can punish countries and force their imports to rise, and that destabilizes their manufacturing economies. And when you throw in tariffs, it's enough to make many companies, especially in Europe, move to the US. And it did happen in 2023. Big German companies like Volkswagen and Mercedes, they relocated to the US. VW, for example, built a $2 billion plant in South Carolina and created over 4,000 jobs in the US. And this happened when the dollar was rising, increasing the pain for German manufacturers. It compounded the energy crisis, so companies they moved to the US. However, Trump took things too far with his trade war. He wanted to speed run America's reindustrialization like a video game, and now things have started to turn. Instead of the dollar rising, we have the exact opposite happening. The USD is falling because the world isn't complying with Trump's tariff war. Foreign consumers aren't buying US goods. Countries like Canada, they are even pulling US products off the shelves. US assets are also being sold down. So the demand for the dollar is starting to collapse. The dollar is now retreating back to the 2024 lows. It peaked during the middle of the Fed rate hikes, but it just can't seem to go back to the highs anymore. A weaker dollar isn't good for Trump's economy, not when supply chains and industries are still in shambles. Now, the order of operations here is extremely important. Here's the ideal scenario. You keep a strong dollar plus a trade war to deindustrialize the world. And once you win that battle, then you devalue the USD to make your exports more competitive. But things are not going as planned for the US. The clown show is starting to backfire. And here's why pressure on the dollar will be unrelenting. America's top import is capital goods. In 2023, they brought in over $860 billion in capital goods, and that's imports into US production, the tools and machinery needed to make domestic goods like cars and electronics. And the two biggest suppliers are China and Mexico. Trump just tariffed their imports, and that increases the cost of all their goods and directly causes US domestic production to rise in price. This makes exporting US goods impossible. Tariff or not, countries won't buy them because they're simply too expensive, and that directly reduces the demand for the US currency. However, there's a new pressure point building that's more bad news for the dollar. And thanks to Trump's posture on NATO and pulling away support, the entire of Europe is in panic mode now. They have to find a way to raise an overall sum of $10 trillion to boost their defense industry. The EU is now on a war footing, and war spending is the next shoe to drop.
Europe is ready to assume its responsibilities. Rearm Europe could mobilize close to 800 billion euros of defense expenditures for a safe and resilient Europe. We will, of course, continue working closely with our partners in NATO. This is a moment for Europe, and we are ready to step up.
And this will be spearheaded by the Germans, which is actually very shocking. The German parliament has officially approved plans for more spending surge. This is historic because the Germans were considered very fiscally prudent. Unlike the US, they don't really take on a lot of debt. They are more concerned about lowering their own debt to GDP instead of increasing it. And here's how crazy things have flipped. There are two components to the bill. The first is to release defense spending from the debt brake. In other words, Germany can now spend an unlimited supply of money to rearm. The second part is setting up a 500 billion euro fund to invest in German infrastructure. And this is the biggest package in German history, and the effects will affect the whole world. Understand what this means. Like China, the EU is now starting to invest in their economy. They are launching a tsunami of stimulus which will come from borrowed money. While we all know the spending will be wasteful for investors, it doesn't matter. It feeds into their growth story. More spending equals more growth. While the exact opposite is happening in the US, they are cutting down on the deficit, which takes away the biggest driver of US consumption, deficits. And if that's the case, where would you rather invest? German bond yields are starting to push back towards 3%. Normally, this would be horrible, but the Germans are committed to endless spending. They just destroyed the debt brake, and as yields continue to rise, it competes with US treasuries for investment money. So the whole picture is a big mess for Trump, who wants the dollar as the world reserve currency. US rates are going down because of recession fears, but yields in Germany are now heading up, which makes it even more likely for money to flow away from the US into German bonds and stocks. Remember how currencies move. As the dollar continues to fall, it enters a feedback loop where foreign investments become more attractive. Local US investments become less attractive. Now, the dollar as a benchmark currency is a double edged sword. When it is rising, it acts as a tailwind to attract investment money. But when it falls, it can send the dollar tumbling even further if investors pull their money away and sell dollars. Over the last month, the euro has appreciated against the dollar by 4.6%. So if you were invested in German bonds, you will enjoy the yield plus gains from the currency movement. This is not good news for the US dollar. There's a very good chance the fall could continue for the next couple of months at least. This puts tremendous pressure on Trump's economy and really makes his plan to reshore manufacturing that much harder. And here's how much Germany could be spending in the next decade or so. Mer's Whatever It Takes plan is the biggest in German history. It's well over 2% of GDP. The amount will be more than a Marshall Plan. It will be double that of Germany's reunification spending. And the crazy part is, the defense portion is uncapped. So we have to brace for a tsunami of bonds coming out of Germany. They will have to raise a ton of money and it won't be enough. Their industries are in shambles, so they have to spend more. To get 1 euro of output, they probably have to spend 2 or 3 euros, but it has to be done. Germany has confirmed that they can't rely on the US anymore. This outcome is very ominous for the US dollar, and listen to this, UBS predicts the dollar would weaken even further by the end of the year. The bank is forecasting the euro to hit 1.12 against the dollar, so the dollar could fall another 3 to 5% easily. The pound has already hit 1.3 to the dollar this morning. The dollar could fall against the yen to 140 from 150. This is not a good outcome for Trump. The USD is getting hit from all directions. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. We have money flowing everywhere except the US economy. Money is flowing to gold, it's flowing to Chinese stocks, and now liquidity would most likely flow to Europe as well, especially Germany. If there's one thing that can make the US U-turn on their policies, it's probably the collapsing dollar, because it looks like Bessent is digging a deeper grave for the US economy.
On April 2nd, we're going to produce a list of other countries' tariffs, and we are going to go to them and say, look, here's where we think the tariff levels are, non-tariff barriers, currency manipulation, unfair funding. Again, it's win-win. Either the trade friction that these other countries have come down and we get fair trade, and if they don't follow President Trump's lead, then he will raise the tariff wall, and as he said in that video, we're going to take in substantial revenues. We're already taking in substantial revenues from the China tariffs that can be used to fund this massive government deficit that we have.
Now he has made a lot of assumptions, especially about countries complying. But what if they don't? They could give the finger and not remove the tariffs on US goods. If foreign consumers stop spending on US goods, this will put enormous pressure on the dollar. Sure, the trade deficit on the US side might come down, but foreign demand could also simultaneously drop as well. Since the war started in 2022, imports of US arms rose for many EU countries, including Germany. For the Netherlands, it was over 90%. For Germany, it's nearly 80% last year. But Germany is now trying to revive their weapons production. They will start to spend less on US equipment and gear. There's already a sense of desperation within the EU. Von der Leyen has also made calls that defense spending has to be European, and it will mean fewer battle tanks and fewer F-35s being ordered from the United States. Between 2020 to 2024, the US supplied 64% of Europe's total arms. That's a big chunk of US sales, which hit $318 billion last year. So demand for America's greatest export, which is war, is going to fall as well. I don't think Trump really saw this one coming. Once again, we have to underscore the fact that the US can't afford to have more external shocks happen to its economy. Consumer demand is already collapsing. The last thing Americans need is for the dollar to come tumbling down. We have the dimmest outlook for personal finances in modern US history. It's even lower than the '08 collapse, the energy crisis in '79, and the pandemic 4 years back. And I have to state this again, a strong dollar policy is better for US consumers than a weaker dollar, especially during this period of transition. If it drops by another 5 or 10%, it will just increase the odds of a recession. Imports will rise to the moon amid a period where the world is boycotting US goods. Even Bessent can't keep a straight face when asked about the chances of a recession coming.
Can you guarantee that we're not going to have a recession? And you wanted to address that this morning.
Yeah, well, look, it was a silly question. Can you guarantee there's not going to be a recession? I can't guarantee anything. I can't guarantee that the journalist who asked me the question that her news program is going to be on in a year. But what I can guarantee you is that there is no reason we need to have a recession. I think that there's the economy in the first quarter is doing better than the media is reporting. I think we're seeing some very good underlying data from credit card companies, from banks. I think that the airlines, which reported some bad passenger numbers, a big amount of that is from federal employees who are not flying right now. So the underlying economy is healthy.
Bessent talks about data from credit card companies, from banks, and from airlines. But why not talk about the big GDP estimate coming out of the Atlanta Fed? The latest update is out, and we are still seeing a negative print of minus 1.8%. The US economy is expected to fall to contract in Q1 when the trade war isn't even in its full swing yet. What will that mean for Q2 GDP when Trump ramps up the pain? Because it will impact the whole world this time, not just China, Canada, or Europe. To really understand the headwinds coming in the weeks and months ahead, Germany's big spending move is not trivial. It has the potential to vacuum away a lot of investment money out of the US and reduce US weapons exports to Europe. Not good at all for Trump's economy. But let me know what you think. Can the dollar recover from this, or will it hit even lower than before? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.